Hello there, and welcome to today's 5 with Fitz. So, the question on everybody's mind is, can we finish the week in the green with 5 consecutive days of upside? Now, loads of people are going to tell you no way, but I think it's a definite maybe. Here's why. My research shows that 5-day streaks tend to happen 2 to 5 times a year, and this is important, but they happen in clusters that are typically associated with the birthing of new bull markets. Now, if you look at history, examples include 57 to 59, 82 to 2000, and 09 to 2020. Now, what's interesting about this is that A, 5-day rallies are a lot more common than people recognize, and B, they often precede solid one-year returns, typically 10 to 20%, aligning with the average annual return of 10.13% or higher in strong years. Now, again, here's some examples. In 1958, it was plus 38.06. In 95, plus 34.11. In 2013, plus 29.60%. Now, does that mean it's a foregone conclusion that we're going to go higher this time around? No. And in fact, it'd be naive to think so. But still, that's what you do want to think about. The markets have very clearly made an upside pivot, which means that the only obstacle in front of us today is how much FUD remains in the system: fear, uncertainty, and doubt. Now, to a point I've made many, many times over, and at the risk of sounding like a broken record, admittedly, the markets reward knowledge, not guesswork. So get knowledgeable. Here's my playbook. UNH puts are exploding on news of a DOJ probe. Now, I told you earlier this week that UNH was in serious bandini, and I suggested puts, a bet that the stock will decline, as a way to capitalize on the chaos that I suspected was coming. See number 3 here earlier in the week. I might have been onto something. Shares of United Health Group, UNH, took a 10% nosedive yesterday after the Wall Street Journal reported that the company is now the target of criminal fraud investigation by the DOJ. The focus? Alleged manipulation of Medicare Advantage billing, a business so profitable it's practically become the private insurer's golden goose. Now, surprised? Again, I'm not. This is the same company that's been using, quote, unexpected medical costs as a fig leaf for a string of earnings missteps, slash guidance, and a CEO exit so abrupt they had to yank the former boss out of retirement like it was a fire drill. Now we're learning that the feds are digging into whether UNH padded its Medicare Advantage payments by upcoding, phantom diagnosis, and get this, billing for services that may not have even happened. And as an aside, I will be shocked, jaw-droppingly shocked if UNH is the only player in this game. In fact, I can think of a half a dozen other companies off the top of my head that could very well have some variant of this thing going, including one where we personally, my bride and I, recently experienced exactly the sort of behavior that UNH is allegedly engaged in. Now, I'm going to be watching things very closely. 3 things. Number 1, what's the Department of Justice next move? Formal charges or just a slow burn? Contagion to names like Humana or CVS Aetna. I mean, they're all swimming in the same pool here. And politicians love a villain. And this one's got a balance sheet. So speaking personally, let's see if the regulators have a spine. I think it's long overdue. Healthcare, and again, personally, I think healthcare should be a strategic national priority, not a quarterly profit engine run by companies that ghost you when you ask where the money went. So here's a trade idea in this situation. Putskis continue to be a viable option, pardon the pun, on choices like IHF, an ETF, or specific companies for more juice. Now, this is going to take a while to play out, and that in turn means plenty of opportunity for those on the right side of the trade, quite literally. Now, dividend hunters should be wary for obvious reasons, in my humble opinion. Number 2, survival games 2.0. Yesterday, I told you about Dick's and Foot Locker teaming up to fend off Amazon and Nike. Today, it's Charter and Cox, 2 legacy cable giants talking merger. Don't be fooled. This isn't about growth or synergies or whatever MBA buzzword bingo hits the wire. And it sure as heck isn't strategic masterstroke as build, nor is it a bold move to fend off the streaming hordes, the fiber disruptors, or the wireless stampede, whatever you want to call it. This is about survival, pure and simple. Just like dinosaurs once roamed the earth, cable companies used to dominate the living room. Now, those same companies are scrambling to keep streaming from eating their lunch and their bandwidth. Here's an investing tip. When titans merge, it is rarely a power move in situations like this one. More often, it is panic with a press relief and plenty of spin. So here's a trade idea as well. Skip the dinosaurs. Netflix, Amazon, and Apple could soon be the only games in town as the streaming wars continue. And while you're at it, unless you think I'm kidding, remember that I have repeatedly said to avoid choices including the likes of Fubo, like a channel clicker that's out of batteries. It was a post-COVID media darling, and it traded at nearly $48 a share in early 21, but is now, drumroll please, $3.02, a loss of 93.71% since then. Buy the best, ignore the rest. Repeat it after me. Buy the best, ignore the rest. In this situation and every other investment you've got. Number 3, Novo Nordisk down 50%. Is it time to buy? Novo Nordisk, a media darling, a Wall Street darling, has just announced that CEO Lars, let me get these names right, this is tough, CEO Lars Fruergaard Jorgensen is stepping down, a move that should raise eyebrows for anyone watching the $100 billion and growing obesity drug market. Now, call it what you want, a transition, succession planning, or just time. But when the captain jumped ship, well, the company's market cap is down over 50% since mid-24, it's not hard to read between the lines. Behind the scenes, Wegovy sales are lagging, and Q1 came in soft enough to force a full-year forecast cut. Compound drugs, read cheap copycat alternatives here, flooded the U.S. market while the FDA shortage loophole stayed wide open. And finally, Eli Lilly's Zepbound has been stealing market share with better clinical profile and better marketing too. So now what's happening is Novo's board is scrambling, bringing in foundation chair Lars Ribbing Sorensen as an observer. My 2 cents is very simple. The company is regrouping at the top, probably trying to calm the ship without scaring the street. Now, again, the obesity drug market is expected to explode past $100 billion a year by 2030. That is not, friends, just a gold rush. It is a pharmaceutical arms race. Winning in this space isn't just about clinical trials anymore, like people think. It's about supply chains, pricing power, insurance coverage, and who's first to market at scale. Now, I can make the case that it's time to buy or at least snap up a few speculative Novo shares, calls, or even leaps. Before you do, though, and never mind that I said so, ask yourself if this is a stock with 0 to 1 potential or just another N+1 making better mousetraps. And if you have no idea how to make that kind of choice, you might find one bar ahead helpful. My favorite 0 to 1 choice to give you an idea how different this can be with regard to your portfolio is plus 523.76% off 52-week lows, and I submit could double again from here. So you want to weigh the alternatives. I'm not saying one company is great and one company is poor, but you got to constantly weigh the alternatives. Missing opportunity is always more expensive than trying to manage or avoid costs you can't control. Number 4, Nvidia. Play the game, but don't get burned. Nvidia has stated that it will not share GPU designs with China following reports that the company is planning to open a research center in Shanghai amidst recent U.S. export restrictions. Now, Nvidia is threading a very fine needle. Nvidia wants to expand in China, and badly, but without tripping any wires in Washington. Now, they've got to satisfy shareholders looking for growth, regulators looking for national security, and customers on both sides of the Pacific who are looking for next-gen silicon. The Shanghai Center, according to reports, will not be involved in chip design or architecture. Instead, it's supposedly going to focus on optimizing existing AI products, exploring adjacent markets like autonomous driving, and recruiting local Chinese AI talent, all while keeping core intellectual property, IP, and fabrication offshore. Yeah, but I digress. My POV is that this is a classic case of play the game, but don't get burned by the rules. Nvidia is not giving up its crown jewels, but it's trying to plant a flag in a market it knows that it can't afford to lose. And why would it do that? Well, the company's still sitting on a greater than 90% market share in advanced AI chips. It's got to do this. And speaking of got to do, you know what to do. And if you don't, I'll be here if you need me. And finally, number 5, it is Friday, so I want to share something that caught my attention. The ultimate Zen out. Take a look at this thing. Oh my goodness, those of you who have been reading along or watching me or dealing with me for any length of time, number 1, thank you for putting up with my nonsense. But 2, you know that I'm a consummate gearhead. If it's got wheels and a motor, I am down for racing, riding, driving in the countryside with my bride. This catches my attention. We've got loads of light bike trails around here, and this could be a super fun way to head for the hills, quite literally. And what's not to like? This has got vintage cafe racer vibes, electric stealth, zero gas, a great price point. The 2025 Beachman 64 blends old school cool with new school tech. 3,000 watt hub motor, steel frame, regen brakes, and up to 70 miles of whisper quiet range. And yes, it seats two, so do bring a friend. On a serious note, and to get back to the money for a minute, as cool as this bike is, the EV revolution will not all be sedans and SUVs. So it's important we consider developments like this one a stepping stone to human mobility. Meanwhile, go check out Beachman bikes. I think you're going to love them. Today's bottom line is very, very simple. It's kind of a spoiler alert, actually. The world will change with or without your approval, and so will the financial markets. So focus on what you can control, tactics, timing, which stocks to buy, etc., instead of worrying about what you can't. As always, let's make it a great day, and of course, finish the week strong. You got this, I promise, and I will see you on Monday. Thanks for watching.